In this video, traders, we're going to talk about how we trade summer markets. Stay tuned. Hey guys, warm welcome to you. So as I'm filming this, we're coming up to the summer period, but when you're watching this, it could well be just a quiet period, a holiday period. Generally speaking, summer is when things get the most quiet. We do have spells, Christmas and Easter kind of, but Christmas still tends to be quite busy up until kind of mid-December. Then it might quieten off a bit. Sometimes you get that rally pushing to year end because the year end's a kind of year end for accounting or for hedge funds, marking to market, etc., etc. So not quite as quiet as summer. Summer, generally speaking, is the most quiet because the people who are moving money around are off on holiday with their kids, going to exotic places, enjoying family time, whatever, because kids are off on holiday. And so whilst the whole fund might not be off, you're probably going to get decision makers who are off. They'll go off one couple of weeks, another one will go off another couple of weeks. So no one's really making big decisions. No one's really wiring money over, pulling money out. It's just kind of floating around. And this is me generalizing, guys. And there have been summers that have been crazy, summers that have been fantastic to trade. But the majority of the time, they're very, very quiet. There's not much going on. So telltale signs that you're in a proper summer market is going to be reduced ranges on the markets you trade, whether that's a currency pair, whether that's an index, whether that's a commodity, ranges will be reduced. News is a key one, and it's an easy thing to monitor. When they start scraping the barrel about the most useless piece of news, Dow is up 10 points based on the Dow is up 10 points based on the expectation that there's going to be a massive import of money and everyone's going to make billions of pounds or whatever it is. You just think, no, 10 points, no one cares about 10 points. It's like 800 points, now we're talking 300 points maybe, 150, all right, 10, nobody. You can't justify why the Dow is up 10. So that's a telltale sign. You're in the market, you're watching the financial news if you do, and I really don't watch the financial news much, but it's kind of a tool you could use to gauge whether things worth watching. So watch out for that. The other thing, guys, is literally to take the time off. Just to say to yourself, okay, not necessarily take it off from trading, but take it off from execution. So rather than sitting in front of the screen looking for trades, you spend that time doing your due diligence. You spend that time perhaps reading some trading books you haven't got around to reading. You spend that time reviewing some of your trades. You spend that time working on stuff that, there's always the saying, like if you're running a business, many people are working in the business, not on the business. And it's almost like trading. You're working in your trading, of course we have to execute, but how many times do we step back and work on our trading? We look at our strategies, we look at our journaling process, we look at the markets, we look at books, we look at stuff from a perspective of how can I improve for when I start again in September, as opposed to how can I improve the next trade. And so that can be very, very refreshing. That can really reset things for you. If you're having a bad period, that can be really good. That kind of says, listen, I'm going to take 4 weeks off from trade. I'm going to trade for 4 weeks, but I'm still going to immerse myself in learning and self-improvement and all the things that I know move the needle for me as a trader. So that's really one of the better things to do with your time. And then you don't have to, concern about the market being choppy. There's so many traps in the summer markets. You'll get spikes in one direction that'll then just drift back down. I've done another video talking about how markets suck you into chop, and they specifically do in summer. Drives up good volume and just dies off. All these kind of things as you're a day trader, or even for a swing trader, you start to see a movement and you think, okay, well that's momentum, and then it just starts to fizzle out, and then you're sitting with trades that are in small loss or small profit, not doing what you want, and your energy and your focus is tied up on something that's really not going to yield anything. And so if you don't take the time off, and like I say, I think that's not a bad idea, taking time off to work on yourself and improve yourself, that's the biggest ROI you'll get. Reduce your trades at least. Have your trade plan and go, right, cut my trades in half, cut my risk in half, cut everything in half, unless I see an ATR of X that allows me to go in normally, because that way at least you're stopping yourself getting caught up in chop, in stuff, and just getting caught up in things that really aren't conducive to good trades, aren't really going to give you a positive expectancy if you traded them time after time after time after time after time. So that's it, guys. Summer trading, take the time off. research, do work on yourself. That's what will probably move the needle the most and get you at a better position by the end of the year. If we think the end of the year is a kind of benchmark, that's probably what will do it better for you than trying to trade through it and making a few little bit. By all means, have a hybrid of that. Have some alerts set for your favorite markets, favorite shares, favorite commodities, favorite currency pairs. If they start doing something, or if there's specific news, then by all means, plan to trade around that. Fine, but ultimately be very careful you don't overtrade. That's the nemesis. Be very careful you don't get sucked into kind of things that look exciting. It's a mean reversion environment. Generally, it could all change. By the way, it could all change. Some news could come out tomorrow that changes that summer into the most volatile summer we've had. That's the market. That's the joy, the why we trade, right? We don't know what's going to happen the next day. But generally speaking, if there's nothing extra to stoke the fire, it'll plod along. Not much will happen. Government's on holiday. No new legislation. No big things will be going on. It will be relatively quiet. And if that's the case, really protect your capital. Keep your ammunition dry for when you're really, or powder dry, should I say, keep some ammunition back for when you really have the opportunity that you can hit it and you can really make your edge work for you. All right, guys, safe trading, keep the risk managed, and let me know your thoughts on this one in the comment section below. See you next one. Take care. Bye-bye.